Hello, I'm John Mark Young. Today we're tackling a question that stirs up a lot of debate, life insurance. And here we go. This question comes from Ben in Columbus, Ohio, and he asks, John Mark, I've got a buddy who is telling me that I should purchase a whole life policy to complete my financial picture. I'm apprehensive because financial experts like Suze Orman and Dave Ramsey advise clients against whole life and universal life insurance policies. Are they, Dave and Suze, correct that whole life is not the way to go? And if not, what should I do? Well, Ben, let's break that down. Both Suze Orman and Dave Ramsey are big names in the personal financial space. Of course, we love Dave Ramsey. We work closely with him. And they share similar views when it comes to life insurance. And think about this. They both don't sell products. Yes, Dave does endorse a life insurance company, Xander, but he could just as easily endorse a whole life firm. But he endorses what he believes. And think about their motivation, him and Suze Orman. If they give you good advice that helps you, you continue to listen to their show. If their advice hurts you, you will stop listening to their show. So they try to give advice that brings you back to them. It's how they make money. You come back if you're being helped. They both strongly advocate for term life insurance over whole life and universal life policies. And why do they do that? Well, let's find out. First, let's understand the basics of life insurance. Now, term life insurance provides coverage for a specific period, such as 10 years, 20 years, or 30 years, and it's purely insurance and insurance only. Whole life and universal life, on the other hand, combine life insurance with an investment component, and these policies last your entire life. Now, here's where Suze and Dave chime in with their critiques. First, cost. Whole and universal life policies can be up to 10 times more expensive than term policies. Suze Orman points out that the higher premiums could be better spent on your other financial priorities. Now, she doesn't break things into baby steps, but she says pay off your debt, invest in a retirement account. Dave Ramsey often emphasizes the poor investment performance of the investment side of these policies, again, because they're insurance and they're investment. He argues that the return on the investment part of the whole and universal life policies are generally lower than compared to standalone investments like mutual funds and stocks and ETFs and those sort of things you do in your brokerage account. The cash value growth is slow, and it can take years, even decades, to see substantial growth. Another point that they both discuss is the complexity. These things are hard to even explain and look at of whole life and universal life policies. You have to deal with things like fees, you have to deal with riders, insurance jargon, and these policies can be incredibly complicated, making it difficult for the average person to understand what you're actually even doing with it. What are you buying? What are you getting? What's the process? And let's not forget about flexibility, or as it relates to universal and whole life, lack thereof. Suze Orman advises that financial flexibility is crucial, especially when life throws unexpected challenges our way. Whole and universal life policies are not only more rigid in terms of their payment structure, but also come with hefty fees if you decide this policy is no longer right because life changed and you cancel the policy early. So what do Dave and Suze recommend? Well, we know what Dave recommends. They both champion term life insurance. Why? It's affordability and it's simplicity. It provides you with the protection you need when you need it without complicating your financial plan or eating into your budget. Essentially, they're saying term and invest the rest. Don't intermix the investing with insurance. Keep those two things separate. But wait, John Mark, the whole life rep is going to destroy you with the concept of the soft Roth concept. The fact that your whole or universal life policy allows you to borrow against the cash value, and because you're borrowing, there's no tax liability. Well, that is true. There is no tax liability if you borrow against your own money. Hence why when you take a 401k loan, shouldn't, but if you did, that's a pre-tax asset, but there's no tax liability on the 401k when you're using it. Why? Because it's just a loan. You're giving it back. You're paying it back. However, a loan must be paid back. Hence, when you die, the life insurance pays back the debt with the life insurance because you took the debt out against the policy. And it actually probably means your premium payments must be made again as you get older, making the policy even cost even more. Outside of that, my brokerage or my bridge account, it can be tax-free when paired with a Roth IRA, which can make the capital gains tax more than likely free. Consult your tax advisor. But if with good planning, your capital gains tax can be lower. And there's something called a portfolio line of credit. You can borrow against a brokerage account, which is tax-free. When I worked for a private bank, we would have clients with accounts in the $5-10 million range, and they would have lines of credit of $1 million, $2 million. They would tap those assets, those lines of credit, without ever paying a dime in taxes. Now, we don't advocate debt on a line of credit through a brokerage account. That's not what we're telling about. But you can do everything a whole life policy does without the complexity, additional costs, and lack of flexibility. And so that's a wrap on why my guy Dave Ramsey or somebody like Suze Orman says steer clear of whole and universal life insurance. It's all about keeping your financial plan simple, efficient, and within your control. So if you found this video helpful, would you do us a favor? You can like, subscribe to this video. You hit the like button. It helps us with YouTube, Google, and Rumble's algorithm. You hit the subscribe button, and it pushes our content out to more people, or to you, as we release it, including a video we just did on donor advised funds that will be being released in the next few days. And if you have a question about your life insurance situation, you can contact our in-house life insurance expert, Drew Hodgkin. He'd be more than happy to talk to you about getting you set up with a term life insurance policy to make sure your family is covered in the event that something does happen to you. It's the simplest, the easiest, and generally the most cost-effective way to get life insurance. Thanks so much. We'll look forward to seeing you next week.